Ladies and gentlemen, this bull market, although it's been very strange, although it's been very boring at times through these long, drawn out consolidations, has actually been extremely simple. It's been simple for a couple of reasons. Well, the first reason, and the main reason that people should actually care about, is that during these long, drawn out consolidations, it's actually very easy to identify if a breakdown occurs, right? If we have a 9-month long consolidation sideways, obviously breaking below that sideways support zone is going to be a bear market. But of course, that breakdown never came. Hence, we remained in a bull market. We have a 8-month long descending channel formation on Bitcoin. Obviously, a descending channel breakdown will lead to a bear market, but that never came. Hence, we remained in a bull market. The same thing with this descending wedge pattern, which lasted 6 months. The breakdown simply never came, so we remained in a bull market. The issue with the market environment right now is that for the first time in this entire bull market, for the first time since Bitcoin's been really down at $15,000, we don't really have a clearly identifiable pattern. And so for the first time, that really starts to complicate our analysis. And it makes the bearish argument seem quite strong in comparison to what it seemed like at any point in this cycle. Bitcoin is sitting on medium-term support right now. And it's very important to note that I don't necessarily think that medium-term support zone breaking would mean the end of the bull market. But I would think that medium-term support zone breaking would be a call for us to de-risk quite heavily, as it could be a sign for the end to come. Hopefully we avoid this situation entirely and just bounce here. That would be excellent. And it's totally not off the table, by the way. But the red flags that are forming cannot be ignored. The red flags come from the weekly chart RSI on Bitcoin. We have the 62 level in red on the weekly chart RSI, which is broken down. We have a bearish MACD cross on the weekly chart RSI potentially coming by tomorrow. Both of these red flags do have counter arguments, and I'll bring them forward to you today so you can make your own mind up on where you stand. But they do highlight the fact that the situation is a little bit risky right now, and I'm not denying that. It is risky right now. I'm going to give my best to give you my opinion. Hopefully you'll find it useful. For 30 seconds before we get into it, I'm just going to discuss the Bitunix Exchange. It's a global non-KYC exchange. You don't need a VPN. You don't need to be from anywhere in particular in the world to sign up. It's globally accessible, which is very rare in 2025. What's also rare in 2025, actually, is non-hacked, right? It's never been hacked before. It's never had a security breach before in 4.5 years of being on the market. Exceptionally good track record. If you want to sign up to Bitunix, you can do so with my referral link down below and get a 15% trading fee discount. It's got all the trading pairs, all the features that you expect on a major exchange. Comes at a lower rate than most exchanges, especially with that referral link down below. Also, it comes at no cost to you having to KYC, at no cost to you having to expose yourself to unnecessary risk as per exchanges that have been broken into before. So check it out down below with my referral link, 15% discount. Let's get into the content. So I do want to start out with some of the bearish claims here. There is a bearish argument to be made from a weekly chart RSI perspective, looking into a level on the weekly chart RSI, which is no doubt real. It's a 62 level on the weekly chart RSI. It might sound arbitrary, but I assure you it's not. 62 is not just a random number that I've picked out on the RSI. It is the origin of weekly chart RSI price action on Bitcoin. And the weekly chart RSI is not just a random time frame. Of course, the weekly chart is a highly recognizable time frame to all analysts. But just for further confirmation, the RSI itself on the Bitcoin weekly chart has been beholden to many important patterns that have defined Bitcoin ranges historically. Support zones like this, resistance lines like this. I'm just drawing out a few right now so you can see them. And of course, this is a useful indicator all around. Now, the big crux of the issue when it comes to this 62 level on the RSI is the fact simply that it's been broken down from in the last couple of weeks. And in 9 hours, we will most likely see our second weekly candle close below that level. Now, that might not look like it means anything because you might look at the RSI here and see plenty of fake outs, but it's important to note that the RSI is an indicator that we are viewing in hindsight. We're not viewing the price action that occurred within these weekly candles on this RSI chart. We're viewing the mere closing price, and that makes it look like it's much more prone to fake outs than it is. The reality is this 62 level is very, very unlikely to fake out above or below. The only notable fake out that I can think of recently, literally in basically the last, or the entirety of this bull market, let's say, was one very brief fake out over here. But I don't even know if I would call this a fake out because it still led to a significant rally on Bitcoin from like 20K to 35K. But the one singular fake out is actually just from a couple of months ago in June when we dropped below this weekly chart RSI level briefly and got right back above it with a support flip. Other than that, this indicator throughout this entire bull market has been relatively clean, which makes it quite concerning that we've broken down below it. That's a threat. That's undoubtedly a threat, and we can't ignore a threat like that. Now, I'm going to swing back around and discuss this more and give you the bullish side of the argument in a second, but I want to look into yet another threat before we do that, just get all the bearish stuff out of the way, and that is the weekly chart MACD. The MACD indicator, the moving average convergence divergence indicator, is another momentum indicator similar to RSI, except it's using moving averages. And basically, when we see this line here in blue, the MACD line, cross below the signal line in red, what we are seeing is a bearish cross, especially when that happens in overextended territory, which represents the upper bound of this range here on the histogram. So what we are seeing right now as we speak, or what we will potentially see in 9 hours, I should say, unless we see a dramatic swing to the upside in the next 9 hours, is a bearish cross. And a bearish cross, of course, on the MACD is undeniably bad. It is a bad thing. We don't want that to occur. The last 2 times it has occurred, we have seen pullbacks, right? We saw this breakdown here in February 2025. We saw a breakdown in April 2024. Both of them led to pullbacks. Now, let's get into some of the bullish counter arguments here. Let's start with the RSI. We'll work our way back to the MACD in a second. Although it's undeniably a bad thing that we are seeing here on the RSI with a breakdown from 62, we also have to remember that the same chart, the very same chart here for which we're seeing the breakdown, is a chart that has actually got a pattern, an active pattern that we're currently range-bound consolidating within and have been doing so throughout the entirety of this bull market. So just like I said before, the entirety of this bull market has seen 62 being an important level in the RSI. Well, guess what? The entirety of this bull market has also seen this pattern, this triangle, be an important level in the RSI as well. In fact, there's nothing really saying that that 62 level is more important than this triangle. I suppose you could argue it's older, that is true, but it's also been something that has been relatively prone to fake outs historically speaking, while this triangle has remained completely valid. So perhaps there's an argument to be made that even we should be trusting this triangle even more. This triangle could act to confirm a breakdown in some sense on the 62 level on the weekly chart RSI. And this pattern on the weekly chart RSI here in white is plummeting towards support. And of course, there is a chance that support could hold. There also is a chance that support could break. That's the issue with triangles like this. Although they do exist, they don't really give us much predictive clarity. They only give us reactive clarity, right? If that triangle breaks, you can be damn sure the market's not looking good because that triangle has encompassed the entire bull market. But currently, it is not broken. So the point of this is not to say that the weekly chart RSI looks bullish. It certainly doesn't on a medium-term level. But the point of it is to say that it's not like we have confirmed a bear market just with that 62 RSI breakdown. We are still within the same pattern that we've held throughout the entirety of the bull market. And within that pattern, we've moved from 24,000 up to 124,000 on Bitcoin. We can certainly move again if the market wishes to do so. So my point is this 62 RSI breakdown is not the be-all end-all. And the same can be said about the MACD. Yes, this MACD cross is not good, but it's important to note that we have seen MACD crosses, bearish MACD crosses before within this cycle. We saw one back here in April 2024. We saw one back here in January 2025, even earlier this year. And yes, both of them led to corrections. But notably as well, both of them did not lead to the end of the bull market. Corrections are not the same as the end of the bull market. We also have to note that when we saw this bearish cross on the MACD within this bull market, it led to nothing, right? So you can see fake outs. You often do see fake outs. Another one right here on the bearish MACD. And of course, this hasn't closed yet, but that's probably going to be closing bearish. MACD is an indicator that is prone to fake outs. And even within a bearish cross, that doesn't necessarily mean we're going to be seeing the end of the bear market. As the last three bearish crosses we've seen actually throughout this bear market. In fact, that makes all of the bearish crosses we've seen, this bull market, I should say, invalid from a cyclical ending perspective. What I mean is they've led to corrections, but not the end of the cycle. And these points, these counter arguments, is what leads me to believe that, yes, these are red flags, but they're not cycle ending indicators. They haven't seen the validations they need to be cycle ending indicators yet. They are merely red flags. The issue with these red flags for the bulls is these red flags, although they have not been validated yet by actual price chart breakdowns, the problem is those validations could come quite low, okay? Bitcoin breaking below this weekly chart RSI pattern will happen below the price zone we are currently holding on a medium-term level, right? The weekly chart RSI breakdown won't occur at the same time as this bull market support band breakdown will occur. So the argument becomes, well, do we hold until the weekly chart RSI breaks down, for example, or do we run for the hills and flip bearish when this level breaks here? And my answer is, I don't think it's smart to constantly lower the level of support that you're looking at in order to sell, because that will lead you into potentially holding for a very long period of time and potentially holding your bags while they're down the toilet, right? For me personally, it seems logical to de-risk as high as possible at the first real confirmed signs of bearishness, for example, if this level breaks, and then simply buy back if that turns out to be a fake out, and accept the fact that you'll be buying back slightly higher. But of course, that's a personal decision. Do you want to risk buying back higher, or are you happy to lose more money or potentially risk losing more money by only selling when that full confirmation occurs? Because I'll tell you right now, full confirmation of a bear market is not going to be occurring at 107,000. Yes, this is a critical level of support horizontally. The bull market support band's here. We've also, by the way, tested the bull market support band at this point of the cycle exactly with horizontal neckline support exactly in the last two cycles. We did the exact same thing we're doing now in 2021. We did the exact same thing we're doing now, neckline of support, bull market support band retest, swing back to the upside. We did that in 2017 as well. This has happened before. So on a medium-term level, we're certainly not, destroyed yet. We could certainly bounce here. But also, if we don't bounce here and we do drop below this level, even that won't be enough confirmation to say we're in a bear market definitively. But that doesn't necessarily mean you should be holding. You have to react to medium-term price action, or at least I think you do. Because the reality is you can always buy back later when the bullish clarity comes back on the medium term, but you can't rewind time and sell again when the breakdowns occur. So I look at the charts right now and I see two kind of degrees of hope. I see hope right here as we stand at 107.3 thousand. I think there is a considerable chance that we bounce here. And I think that even if we bounce here, I do see hope lower as well. I'm not one of these people who thinks the bear market is over if this level is lost. I see hope coming from the weekly chart RSI and the triangle. The 2-week chart RSI says the exact same thing. And quite frankly, I see potential hope coming from the broader 4-year cycle, because the 4-year cycle, by the way, doesn't care about price. The 4-year cycle only really cares about one thing: dates. And we could see basically anything occur between now and October. If we swung back upwards in October, no matter how ridiculous that looked, and topped out in October, that would be a regular 4-year cycle top. And all of this nonsense that we've seen would be irrelevant in the hindsight, broader cyclical analysis. So what I see right now in conclusion are threats forming on Bitcoin. And I see us in a position in which we will need to react if those threats drop us below this level we're currently holding. But this level we're currently holding is not necessarily the be-all, end-all for the bear market. It is a zone in which we would be no longer comfortable holding really anything. Or at least I wouldn't personally. In fact, I'm not holding anything right now and haven't been since August 22nd, as I mentioned the other day. So like always, I do apologize for leaving you in a position in which I'm not giving you a clear prediction. I don't think that's really possible right now. All I can say is this: I remain macro bullish on Bitcoin, and I even remain medium-term bullish on Bitcoin, because this medium-term level has not even been lost yet. I understand there are risks that are developing, and I'm taking them seriously, but they've not been validated yet on either a medium-term level or a macro level. If we drop below 107,000, they will be validated on a medium-term level. And a little bit lower than that will come the macro confirmation of a potential bear market. And then we can reassess the entire cycle. Hopefully we don't get to that point. Hopefully we can just bounce here. That would be excellent. Let's see. Definitely a very, very intense moment in the market. Guys, thank you for watching. I really hope you enjoyed. Again, go ahead and check out that Bitunix Exchange if you did. If you want an exchange that is globally accessible without a VPN, no KYC required. If you want an exchange that's never been hacked before, in over 4.5 years being actively tradable in the market, you can check out Bitunix with my referral link down below. You just need an email address and a password to sign up. You're helping out the channel by doing so. You're helping out yourself by getting on a great exchange, and even further so by getting a 15% trading fee discount attached to your account for life exclusively with my referral link. So use that link to sign up. Check it out. Thanks for watching, guys. Hope you enjoyed. I'll catch you soon.